Hello and welcome to The Impact. I'm Mike McClanahan. Does state government need more money to meet the needs exacerbated by the pandemic? And if so, should lawmakers revamp the tax base while they're at it? The state relies heavily on sales, property, and business taxes. At least 3 different capital gains tax bills have been introduced.
For the record, this isn't a statement in support of bigger government, but for a fairer way of paying the government's bills.
The voters here have voted against this numerous times. I think we show a disdain for the voters in this state by continuing to try and press this thing.
The governor has proposed a 9% capital gains tax on annual investment earnings over $25,000 for individuals and $50,000 if filing jointly. Senate Bill 5096, sponsored by Democratic Senator June Robinson, contains exemptions for home sales, retirement accounts, livestock, timber, and business equipment. The bill has an emergency clause, eliminating the option for a public referendum to repeal it. Senate Bill 5204, sponsored by Democratic Senator Bob Hasagawa, would create an 8.5% capital gains tax on the sale or exchange of long-term capital assets to help fund a universal essential health benefits trust. The bill also includes exemptions for home sales, retirement plans, timberland, livestock, and business equipment. And House Bill 1496, introduced by Democratic Representative Tana Sin, would create a 7.7% capital gains tax on real estate sales and a 9.9% tax on the sale of stocks, bonds, and other assets for earnings greater than $200,000 per person. The funds could be used for child care assistance. The bill contains similar exemptions for home sales, retirement accounts, agricultural property, and business equipment. 26 Democratic state representatives and 12 state senators have signed on to a bill that would make Washington the first state to impose a wealth tax. House Bill 1406 would create a wealth tax aimed at billionaires living in Washington. Sponsored by Democratic Representative Noel Frame in the House, with a companion bill sponsored by her Democratic colleague, Senator Sam Hunt. Now, this bill would impose a 1% tax on taxable worldwide wealth of more than $1 billion. It covers cash, cash equivalents, stocks, bonds, commodities contracts, pension funds, and other intangible financial assets. It would take effect January 1st of next year for taxes due in 2023. Joining me now, House Finance Committee Chair, Democratic Representative Noel Frame of Seattle, and Ranking Republican Representative Ed Orcutt of Kalama. Thank you both for joining us. Democrats have proposed multiple different capital gains tax bills, and Representative Frame, you sponsored a wealth tax aimed at intangible assets worth more than $1 billion. We'll get into the specifics shortly, but first, do you see this more as an issue of state funding or an issue of tax fairness, the proposals in general? Let's start with Representative Frame.
Well, thank you, Mike. Thanks for having us today. And I really appreciate the question. As I've talked about, several of the proposals that we are putting forward this year are considering about what are the tools that we have in the toolbox for our tax code. And right now, the ones that we have, sales tax, property tax, and our business and occupation tax, tend to be regressive tools, and they have other challenges as well. And so as we have a committee dedicated to tax and fiscal policy in the House, unlike our colleagues in the Senate, we are diving in deep on several policies to think about better tools that address issues of fairness, as you say, Mike. I talk about it in terms of sort of equity, but that is definitely the idea. Let's discuss multiple proposals and get some better tools in the toolbox.
How do you see the overall push, Representative Orcutt?
It's really putting the cart before the horse, as far as I can tell. We've got the tax structure work group that just started up this year and isn't scheduled to complete its work until 2022. So realistically, any of these proposals should be run through that process first so that we can have a good idea of what a tax system, if there were going to be any changes, what that might look like. And we could do it in the context of all of our tax system now, rather than taking one at a time and trying to run it through a committee process.
And I want to go back to Representative Frame. For years, tax increases have been a hard sell in the legislature and at the ballot box. Of course, this year there are extraordinary circumstances with the pandemic and some of the needs that are out there. But do you think that the overall momentum for making some changes related to the tax code, particularly with a capital gains tax or a wealth tax, do you think that something is different this year?
I do, Mike, and I wanted to say a big thanks to Representative Orcutt, who with me served on that tax structure work group. And it's hard when you put forward multi-year processes. Time doesn't stop in terms of our legislative responsibilities, and so I feel like we have to have conversations on two different parallel timelines. I would love to see some of the proposals that are being put out this year be a part of the tax structure work group, and we're just getting to that point now where we're thinking about what are the scenarios we want to take out and ask for feedback from the public. So I think that's important. But at this moment in time, we are in the middle of this recession. And I think that the question that we have to ask ourselves is who is going to pay as we think about economic recovery and rebuilding and reimagining our economy. And, Mike, when in the interim, when we were thinking about economic recovery, we weren't sure if federal dollars were coming in. We started to look at the tools that we have in the toolbox to raise the kind of revenue that we would need to do small business grants, rental assistance. These are the things that there's bipartisan agreement on. We just got a $2.2 billion package off the House floor, again, largely with federal dollars. As we move forward, if we hadn't had those federal dollars, the tools that we would have had would have been very restrictive and would have asked literally the lowest income households to disproportionately foot the bill for economic recovery. So in this moment, it feels like asking those who are currently not sharing equitably in the responsibility of funding government programs and investments to contribute in a more equitable way to economic recovery feels like the right conversation to be having right now.
What's your perspective on that, Representative Orcutt?
I think when you're in any kind of a downturn, instead of looking to take more money out of the economy, you should be looking to stimulate the economy. And adding taxes doesn't do that. One of the things that we've been pushing for ever since May, ever since some of the shutdowns started, was to try and figure out ways to safely reopen as many businesses as possible. The governor shut down things in a way that was not equitable to the businesses that were out there. If you worked for government as a contractor, you could be open and everything was fine and you were safe to do so. But somehow, if you were working on a private construction project, somehow you couldn't be safe. That's inequitable. So if we want to talk about equity, we really should be talking about that. I don't think the governor has been science-based in the way that he's done things either, in that he shut down businesses without any clear scientific evidence that shutting down those businesses has an effect. In fact, some of what he's done may actually have an adverse effect on reducing the incidence of COVID infections. We heard that the problem was with large holiday gatherings. Well, when you restrict people from being able to go to restaurants, then you encourage them to have those home gatherings and to meet in other ways, rather than to do it in a restaurant where there are some controlled circumstances there, where people that you're interacting with have got to use masks and use social distancing protocols. So I think some of what he's done has actually made things worse. Had he not done that, we would see our revenues coming in higher and our needs for services coming in lower, very simply because we'd have more revenue, more people working, and fewer people needing assistance.
If we can go ahead and jump to some of the specific proposals, Representative Frame, your bill would create a tax on intangible wealth above $1 billion. The estimates provided by the Office of Financial Management or the Department of Revenue, I forget which, but I read that this could bring in nearly $10 billion in the first 4 years after it takes effect. What is the end game here? Where would the money go? And apart from Jeff Bezos and Bill Gates, who would be paying it?
Great questions, Mike. So, and I actually want to go back, Mike, your questions perfectly aligned with what Representative Orcutt just said about stimulating the economy. In the proposal, House Bill 1406 is the Washington State Wealth Tax. In that bill, we point to a couple of ideas of how you could use that money, and talking specifically about credits against tax paid. And I will say in our committee already this year, we have moved House Bill 1297, the Working Families Tax Exemption, sponsored by Representative Ty with the co-sponsorship from Representative Stokesbury. Bipartisan agreement that getting some of those tax dollars back in the pockets of working Washingtonians is a really great way to stimulate the economy. During our November committee days, Dr. Lurch from our Economic and Revenue Forecast Council showed us how the revenue estimates changed over the last year. And he pointed to that forecast in November and really showing us how our revenue started to really bounce back when those federal stimulus checks came down and people were immediately able to spend that money. Working Families Tax Credit is a great example of some of the ways that we could use that money. Another proposal, which we're having a hearing for in about an hour, House Bill 1494, the anti-displacement property tax exemption, is thinking about, should we finally join 40 other states and having a broad exemption for one's primary home to help, again, sort of rebalance the code around the property tax specifically. And Mike, this is with the wealth tax, as I've talked about it, you know, when we think about what are the wealth building tools of the middle class versus the wealth building tools of the ultra wealthy, real property, particularly one's home, tends to be the primary wealth building tool of the middle class. And we tax that asset when you own it, and we tax that asset when you sell it. Whereas with intangible financial property, we tax it 0% when you own it and 0% when you sell it. And so part of 1406 is about bringing equity and parity to the code. And I'm offering this up as a, you know, consideration for my colleagues as a potential tool in the toolbox to think about structural tax reform.
Representative Orcutt, what are your thoughts about the concept of the wealth tax as proposed in the bill?
Well, there's a lot of questions about it. One, constitutionality. You know, they put it out there as a property tax, but it would work differently than our current property tax system. Currently, property is valued as of January 1st. This one will be done on December 31st, which is very odd that they would do it one day different. But it won't be rolled into the property tax system, because the way our property tax system works is once you have new growth added in, then you've established what your budget amount is, and then it's spread across the assessed valuation. This won't happen with this tax. It will be set aside, and it will be a rate-based system rather than the budget-based system we have for the rest of the property tax. Collectability. If you were going to be taxed $1 billion, would you stay in this state, or would you move to another state? And I think that's a very big question. And you have to look at this as not only will they be taxed potentially $1 billion, but that's $1 billion every year, year after year after year after year. Think about somebody that has wealth for a 30 or more year period. They're going to be taxed over $30 billion. Would you stay if you were going to be taxed $30 billion? People that have this kind of wealth, they have the ability to move somewhere else. They didn't get wealthy without knowing how to take advantage of tax codes and to get the maximum benefit out of whatever the tax code is. They will look at different states to figure out where they have the best tax advantages and weigh that against some of the regulatory, some of the educational and other aspects of the economy and the opportunities in those states. You know, I have a real concern about how unstable this could be. We've seen where some of these people who have the higher wealth, they can lose $5 billion in a single day on the stock market. So it's going to be similar to what a capital gains income tax would be, as far as very poor stability. And we're going to start building budgets on something that's even less stable than what we've got now. And we've had enough trouble balancing budgets with one of the most stable tax systems probably in the nation. And we're going to make it less stable. That's going to make it more difficult to balance budgets. So there's a whole host of problems that I have. And, you know, we've got to remember one thing. It's going to be hard to keep up with any tax system if we're seeing expenditures at the rate they're increasing. Since Governor Inslee's been in office, we've seen our budgets increase by 84%. 84% increase. Who has seen that kind of increase in their revenues? Most people in their businesses have never seen that kind of increase, and most people in their homes and their personal budgets, family budgets, have never seen that kind of an increase either. So we've got to do something about the spending, rather than just look for more ways to tax more people out of more of their money.
Representative Frame, I was going to ask a specific question related to one of the issues that was just raised about the relocation threat maybe that would be posed by imposing this on a limited number of extremely wealthy people. But I'd also like you to respond to just the general comments from your colleague across the aisle.
You got it. So I will just say, I often hear the statistic about the spending and how much it's increased. And I'll just say, when you draw the line and start from the bottom of a recession, of course that line is going to be steep. And I think as we are in the current economic recession, we're reflecting a lot on what we did the last time. And I wasn't part of the legislature then, but I was certainly observing it as a private citizen. And I think we learned a hard lesson there, that cutting the social safety net at the exact time that people need it. And when I say the social safety net, I'm not just talking about, food assistance or housing assistance. I'm talking about things like we're doing right now with the small business grants and other support for our small businesses. Other economies around us, they recovered a lot faster because they invested in their people at the exact time that they needed that support. We did not. And so, of course, that funding, that line is very steep. We also, in that time period, finally complied after 40 years of being out of compliance, upholding our paramount duty with the passage of House Bill 2242 and shifting a lot of what had been local spending on schools to the state's budget. So there's some key factors that go into that number that I think it's important for people to understand. And in all of this, Mike, Representative Orcutt is raising great questions. So I appreciate him so much as a colleague. He's been on our House Finance Committee. I think he said this is his 19th year. He knows his stuff. And as I've, really worked on developing this proposal over time, I will just say that the assertions that people will leave the state is an opinion. It's not fact, and it's not really borne out in the evidence in terms of, looking at the individual people in our state, but also broader research. As I say, we had two pillars of the Washington state community pass away in the last year, Paul Allen and most recently Bill Gates Sr. These are two individuals that absolutely could have left the state before they passed away to avoid the estate tax, which is the one tax that we have on the books that does start to get at wealth a little bit. But they didn't, because they were deeply invested in Washington state. And in the case of Bill Gates Sr., was a passionate and outspoken advocate for progressive tax reform. I believe that people, when they look at this and understand that working Washingtonians are disproportionately funding community investments, and that the wealthiest among us are not even being asked to proportionately share in that funding responsibility, they might think about it twice. And we, again, are talking about some of the most wealthy people in the world, many of which have pledged to give away their wealth. And so, again, the assertion that they, have built their wealth because they figured out how to manipulate tax laws and they would be crazy not to pay this tax. It just, again, it doesn't line up with our actual experience with some of the human beings that we are talking about. And the last thing I'll say, Mike, there's a lot of confusion about how many taxpayers are affected. A lot of people are referring to the Forbes 400 list, which by definition is the biggest billionaires in the world, not all of them. And the threshold for the Forbes 400 list starts at $2.1 billion. Department of Revenue, using confidential taxpayer data from the Federal Reserve, as well as purchased proprietary data from Forbes, shows that we will have nearly 100 taxpayers in Washington state affected by this. And so the responsibility of it is spread across many more individuals than many in the public have discussed. It's not 2, it's not 3, it's nearly 100.
So we've got just 5.5 minutes left. I want to get into the capital gains tax proposals in general. The public has rejected an income tax at the ballot box numerous times over decades. There is an argument to be made of whether or not a capital gains tax is an income tax or an excise tax as it's being framed. And many people suspect that if passed, it will wind up before the state Supreme Court, and that will be up to them to answer. But regardless of those variables, the proposals initially seem to be targeting higher income bracket individuals, but are you concerned that there is concern among the public that eventually this would trickle down to the next bracket and the next bracket down, impacting middle-class families? I know there are exemptions in some of these bills, but I just wonder if that's a concern you're hearing from constituents. Representative Frame.
I'm not, because capital gains is an excise tax, and most middle-class families are not subject to capital gains now, nor would they be subject to capital gains under the Washington state law. So they are very different categories. So no, I actually really don't hear that argument at all, Mike.
Representative Orcutt.
Oh, I hear that concern voiced consistently in my district. And I actually hear from a lot of employers in my district that are concerned that eventually this is going to apply to them. They talk about what happens if they've worked to build a business from ground zero, they build it up and they try to pass it off onto someone else. What are the effects of any of these taxes going to be on their business and their ability to operate? And, Representative Frame talks about, that we've got some billionaires in our state that wouldn't leave if we created a new tax. But there are a lot of businesses, and one, I think some could, with Bezos stepping down from Amazon, he could very well move out of state and take his wealth with him. But there are a lot of businesses that won't locate here. And, I just happened to see something on ABC News talking about Amazon and what it's done for the state of Washington. And I think they said it was about a $100 billion investment that has been made in Washington state alone by Amazon in facilities, in personnel. So that's a huge amount of money. And who's the next potential investor that's not going to come here if we put some of these taxes out there? So I've got really, really big concerns about any of these tax proposals on the rich. And if we're worried that the people at the lower end of the spectrum are carrying too big of a burden, let's lighten the burden. I've got a bill 1358 which would lower property taxes, and you heard the chair talk about the McClanahan decision. That's raised way more money in property taxes than I think any of us expected. And so my bill would actually lower property taxes, which if that's regressive, then the biggest benefit would be to the lower income. So that's just one way that we can go about doing it. And we know tax cuts are good because we've seen tax cuts at the federal government put more money in consumers' pockets and do the exact same thing that the rebates that she talked about in 1297 would do. So looking at ways to reduce taxes on lower income and just lower the more regressive taxes would be a great way of doing it. Lower property taxes, lower sales taxes, lower alcohol and tobacco taxes, which we're told are major contributors to the regressivity of our tax code.
Okay, so we've just got just over a minute left. If I could get you to encapsulate your closing arguments in 30 seconds each. We'll start with Representative Frame and then Representative Orcutt. Representative Frame.
Thanks, Mike. So I just want to close by talking about kind of the last thing that Representative Orcutt said, and just talk a little bit about economic competitiveness in Washington state. We know that there is an extraordinarily weak relationship between tax policy and economic competitiveness. It's not about tax policy. It's about the amenities we have. It's about the low poverty rate. It's about the good schools. It's about the good roads. Washington state is winning in economic competitiveness. And I'll just close by saying that we had Washington's newest billionaire was interviewed over the weekend, just moved up from California. And he was admittedly cranky about potentially the new taxes that are under consideration. But he said something that was very profound. He said, A, he did not move to the state. Tax policy had very little to do with it. But B, he wouldn't be moving with these taxes going into effect because he moved to Washington for the quality of life. And that is what is borne out by the evidence. So I just firmly reject the assertion that people would automatically move if we put better progressive tax tools in the toolbox to make the tax code more progressive.
Representative Orcutt, 30 seconds.
Very simply, we don't need more taxes. We need more tax relief.
Well, that will do it. Thank you both. I'm sure we could have spent more time on this, but unfortunately, we didn't have more time. Again, Representative Frame, Representative Orcutt, we appreciate your perspective.
Thank you.
Thank you.